What we would like to show here today with the people is the $1,300 put on the S&P. These expire Friday, the monthly options expiration here. 16,607 contracts traded. That's huge volume. Not to mention what the open interest is. The open interest on this contract right here, $1,300 put that expires on Friday, 105,000 put contracts open. There's going to be a lot of volatility in the S&P. What it means is that the amount of people that were buying these contracts, they believe that the S&P between now and Friday expiration goes below 1,300 to get paid. We just wanted to show those to our MMTs up and out of the money. Let's take a look at the 1330 put option. There was only 6,300 contracts traded, and the S&P closed at down 8.30 at 1329.47. So when we look at these, the bears are really climbing in. Let's take a look at the earlier highs. Let's take a look today and see where the 1325, there was 17,000 contracts traded for this expiration on the S&P 500 index. Over here, I've got a index on the S&P 500 daily chart. You can see here where we called for the correction in February. We had that rally. This was the first top we talked 3 weeks ago. Then we had the counter rally, and I said we were going to make lower lows. That explains why people are very bearish and buying protection and using this as this expiration trade. 17,000 contracts traded. Let's take a look at another one. Let's take a look at the 1335. This one was the lowest volume, which I thought would be the case. Let's take a look at the 1310. 3,900 put contracts traded today. And the 1320, which we already know, this 1320 put was 9,600 put contracts traded for the monthly expiration. The 1340 in the money had 6,700 contracts. The low was $8. The high is $16.73. That means the S&P had made the intraday high. The S&P sold off and closed down $8.30. This made a big volatile move in the money at 6,700 contracts traded. The ones that we can see below the marketplace is that the call side of the market is pretty heavily loaded here. Let's see how much. See, only 23 people bought the calls at 1320 strike price. At the 1330 call, 436. So everybody is buying the put side of the market. The thing about it is, MMTs, is this trade should have been put on at the second lower high here. This trade was a short-term trade. Then when they had the volatility bounce, and we've made another lower low right here. And the first reversal 1, reversal 2, counter trend 1, reversal 2, S&P is going to come down at 1320 and it's going to test that 50-day simple moving average. However, people are huge on the put side of the S&P 500. The one that we liked was this one here, 17,000 contracts at 1325. And then they came over here and bought, well, the final volume has come out, 19,000 on the 1300 put. 1,300 put, 19,000 contracts. They're buying these contracts to go higher. They believe there are big bearish bets on the S&P 500. The trick to it is calling the market top like SMF did here, then getting a second trade here on the S&P. That's called expert analysis before the move even happened. It's on our homepage. Go look on our homepage. You'll see them there. Look under indexes. Go back here. And understanding daily trends, hourly trends, weekly trends, monthly, yearly trends, it really doesn't matter. What matters is that you know where the trend is going to, why the trend is going to go the way that it is before it ever goes there. And these people are buying big. They close at 15 after the hour. You can see 19,000. You can just see the volume coming in here. They close out in one more minute, but these are people buying these for tomorrow. because I continue to believe that the S&P 500 drops lower.